Woohoo! We got a great start to the market today, May 15th. It's CPI day, and maybe, just maybe, we start a string of some good news coming that helps us even more with rates. Yesterday, we had a better than expected day with wholesale inflation, mainly because of the previous month's huge revision. Today, we move right into CPI, Consumer Price Index. Let's break it down here because it was a pleasant surprise. So, the March CPI showed that overall inflation, I'll keep in mind that's the headline, rose 0.3% last month. Now, this was cooler than expected of the 0.4 the market was planning on. Year over year, decreased from 3.5 to 3.4%, which was in line and expected. The core rate, which strips out the volatile food and energy prices, also increased by 0.3%, which was in line with estimate, and year over year core declined from 3.8 to 3.7, slightly better by 1/10 than the market estimates. This combined with yesterday's big revision really was the springboard to a very good day in bonds so far. Now, breaking down what's really causing the inflation, let's go by category here. Now, energy prices rose 1.1% for the second month in a row, mainly driven by gasoline, which was up 2.8%. Motor vehicle insurance, man, this is just kicking us in the teeth. Brad from Shield Insurance, could you please help us out with this? Showed that it increased again 1.8% month over month and is now up a whopping 23% year over year. Apparel also caused the index to creep upwards by rising 1.2%. Used car prices, hey, a positive, fell by 1.4%. New cars fell by 0.4%, also helping the numbers. Shelter cost, now keep in mind, shelter takes up a whopping 45% of the total core index, rose by 0.4%, declined year over year from 5.7 to 5.5%. Rents rose 0.4% last month, which are up 5.4% year over year, down from 5.7 on the previous month. Owner's equivalent rent, which basically tries to extrapolate a cost of if you rented your home, how much could you get for it in today's market? That rose 0.4% and is up 5.8% for the year, down 1/10 from last month's 5.9% report. When we put all this together, we talked about it briefly yesterday. Two components are driving almost all of the core inflation: shelter and motor vehicle. If you strip out those two things, motor vehicle and shelter cost, all the other categories amount to 0.27% year over year. Very small amount. It just shows you that those two categories are going to take a long process to try to get us down to the overall 2%. In fact, realistically, the Fed's going to need the other areas to contract, not just expand a little bit, to contract, because there's nothing they can do with motor vehicle insurance because they're not going to stop accidents. They're not going to stop the cost of the tech that is being forced to be embedded within vehicles. And it's not going to stop natural disasters. So the Fed has no control over insurance costs. And rent, it's a lagging number that takes a long time to work through the system. So getting down to the target 2% is going to take a while, but we're inching. It looks like maybe we're making that headway that's really needed. The other item that really helped the bond market was retail sales. We were a little bit concerned about this. April came in flat, which was lower than the expected increase of 0.4%. And additionally, last month's really hot number of 1% dropped down to which was 0.7%, got dropped down to 0.6%. So those are great things. We got a little bit cooler than expected from last month and cooler than expected on this report. So those revisions did help out. The less than expected CPI helped out. In fact, we broke through that really, really important 50-day moving average on mortgage-backed securities, broke through it. And we're now up above the 100-day moving average. So we have a couple floors of support. In fact, we got another 30, 35 basis points to go between where we are now and the next level of support. Today, we've got mortgage-backed securities up 42 basis points, and we've got the 10-year bond down 9 basis points below 4.4. So another big number to look at is about 4.27 on the 10-year, because that's the next level of resistance. Mortgage applications for purchases were down slightly last month, 2%. Refinances were up a whopping 5% month over month. Reason for that, people are looking to do cash out refinances to increase their cash flow, use that money to pay down debt, and potentially get out of debt quicker. We can run those numbers for you and help you understand the rate's not as important as the monthly savings and how you leverage that savings into paying down your mortgage faster and saving more money. So today's a very good day. We got green across the board. We're very happy about that, reporting some great news. Give us a call. We'll help you get pre-approved, get you some great rates. 616-293-2189, Scott with the Market Update Desk.